Good morning. Minuteman 6 here from Minuteman Precious Metals. It's July 1st, 2024 at approximately 7 a.m. Eastern Standard Time, and this is our morning market update. Before we get started, please hit that like button. If you're not a subscriber, I'd love to have you. I post new market video updates Monday through Friday, so ring that bell icon to be notified of new videos. Gold is up $6.76 to $2,333.15 at the time of filming during overnight trading on Sunday. Silver is also up 13 cents to $29.27. The gold to silver ratio is down to 79.75. Slow and steady continued to be the name of the game in the gold market last week, as gold once again traded in a narrow channel between $2,300 and $2,340 per ounce. Silver was also range-bound, ending the week at $29.16. Friday morning brought a spike to the weekly high of $2,339.78 per ounce of gold, just before the U.S. market opened, after which it pulled back and chopped sideways into the mid-2,320s for the remainder of the North American session. The latest Kitco News Weekly Gold Survey shows most industry experts planning to sit on the sidelines this week, while retail sentiment is divided on gold's near-term prospects. The senior market analyst at FX Pro is bearish on gold as the prices move below its 50-day moving average, stating gold and the markets along with it may be at the intersection of weak economic data, slowing growth and weak inflation, and a less dovish Fed. This is the worst combination for risk demand and could trigger a broad sell-off, including in gold. Mark Chandler, Managing Director at Bangkok Burn Global Forex, thinks after last week's solid performance, gold is in a position to make gains this week, stating gold recovered from the big dip below $2,300 Wednesday and Thursday last week to recover back towards $2,340 at the end of the week. It recouped the previous week's losses in full. Chandler said the move was sufficient to extend gold's rally for a fifth consecutive month. It has fallen only in 1 month since the end of Q3 2023, and that was in January. Now he believes gold is poised to recover further in the coming days. A move above $2,350 to $60 lifts the tone and could signal a return towards $2,400, he said. Two macro developments that could help gold are the results of the first round of French elections that make a hung parliament more likely, and disappointingly weak U.S. job reports at the end of this week. Kevin Grady, president of Phoenix Futures and Options, said this week will likely see thin markets, but that also means the risk of greater volatility. He stated, "A lot of people right now are taking off work. It started already, and they're going to be down for the week. It's a big vacation week. I think you're going to see a lot of people that are flat. The issue with that is I think that's going to cause volatility, because what's going to happen is that things that are going to be trading and moving the market are the algorithms reading the headlines. I don't think there's some volatility depending on how the numbers shape out. Having a holiday week with a lot of data coming out, it's going to be interesting. You're going to have a lot of junior traders on the desks, a lot of guys that are not the main guys. No one's going to really be taking risks. I think it's going to be a pretty quiet week." Grady acknowledged that in this kind of environment, geopolitical developments like an escalation in Ukraine or the Middle East can disrupt the market very quickly. "I think that's why you're going to see a lot of people, flattening out," he said. "If you're going to be off the desk, you're going to lighten up that position. You don't want to be sitting on a beach and reading news about it and your position is blowing up. It's not the place you want to be. I think a lot of people are not going to be trading as much next week, but again, the algorithms are going to move the market. Grady said he doesn't even expect many traders to be focused even on Friday's non-farm payroll report. And even the people that are around on Friday, when London shuts down at approximately 11:30 Eastern Standard Time, I think the market's just going to die. Everyone's going to be getting out of there early. I think Mr. Grady's take on this week is a solid prediction. There's a human component to the markets, and that human component has families, takes vacations, and is not always thinking about the market every minute of every day. Independence Day will make next week an unusual one for economic data, with the important releases compressed on either side of the holiday. On Monday, markets will receive the ISM Manufacturing PMI report, followed by the Tuesday release of the Eurozone CPI flash estimates and JOLTS job openings. The ECB President, Christine Lagarde, and the Federal Reserve Chair, Jerome Powell, will also be speaking at a central bank conference in Portugal. Then on Wednesday, markets will be watching for the ADP employment report, weekly jobless claims, and the ISM service PMI, along with the minutes from the June FEMOC meeting. After the July 4th holiday on Thursday, U.S. traders will wake up to the June non-farm payroll reports on Friday morning. So to wrap things up, the expectations for the week are for significant market data, but light trading due to holidays both in the U.S. and in Canada. But there is also a possibility of higher volatility in the thin trading. We will see where the week takes us. If you made it this far, thanks for watching. You may be interested in my newest video, Gold and Silver, the Real Winners of the Presidential Debate. I'll attach the link to that video here. Be sure to check out Minuteman Precious Metals for market updates and analysis. Thanks, and have a great day.